Hi, this is Hyperwave. I'm Leah Wald, and we have Tyler here. It's the first time streaming since the webinar. So thank you guys so much for watching today. It is Monday. The Redskins won yesterday. That almost never happens, so that's very exciting. And yes, today we are going to talk about the short squeeze. Come here, pups. And yes, there's nothing behind because I'm moving tomorrow. So enjoy this studio for the last time. So the short squeeze that happened last night, definitely want to demystify what's going on in the Bitcoin market, but especially what happened specifically with that short squeeze. So we're definitely going to talk about that a lot, but also this Tether FUD, very much this Tether FUD. And it's a bit selfish on my part because I very much wanted to talk about this. And then I talked to Tyler this morning and he said, well, actually, I've been tweeting about it all morning. So we have been in sync with, I guess, wanting to talk about this. But I guess just to say that, yeah, everybody's talking about Tether, but they're actually not talking about it, I think, in the way that they should. First off, I will be the first to admit that even what Tether is extraordinarily complicated. I have been confused by it for a very long time. What is Tether? What is a stable coin? What's its purpose? What does it mean for Bitcoin? What does it mean for Bitcoin in the long term? How do you, say, what did it mean for the short squeeze? Can we compare it to anything from the past? Can we learn from historicity? So we're going to try to demystify and get into a lot of things. And yes, as I said in my tweet, Tyler and I, we call spades spades. So you will find out exactly how we feel about Tether on the show, although we talk about it all the time. So there's no surprise there. But I will turn it over to Tyler with a question. Ty, yes, we woke up and I told you there's crazy Tether news as per usual. And then you said, look at the tweets. And I did. And you were comparing this to 2008 money markets.
Yeah, exactly. That's the first thing that popped out to me. And what we'd like to do is just give everybody a little context. The idea of Tether is brilliant, but it's been done before. That's what a money market fund is. A money market fund is a place where you can park cash either at a brokerage firm or at a bank while you're deciding what to do. And the crypto world needed that very, very much. And Tether came along and provided an answer. And now that has come under some fire. And it could be significant, it might not be significant. But what has happened over the last couple of years is it spawned a small number, a half a dozen of other stable funds that attempt to keep price at $1. So let me just give you a little bit of history and compare what Tether is, what it has been, what it has done, which has been very helpful to a lot of people because of the alternative. And the alternative has not gotten better, it's gotten worse. And therefore, more and more money kept flowing into Tether as a way to be able to move Bitcoin from place to place. The problem is that where you can move it to is limited by those that are in agreement with how the Tether system works. So what I want to do is I want to go back into time and just give you a little explanation. We are going to do a webinar coming up here fairly soon on expanding on the ideas of other securities, mainly mutual funds, ETFs, UITs, closed-end funds. You've heard me talk about GBTC as a closed-end fund, but it is not really. And you've heard me talk about GBTC as an ETF, but it is not really. And we're still waiting for one of those things to come along. The thing about the crypto space is that you have very, very few choices. And what Leah and I have been arguing for a very long time is there shouldn't be choices. There should only be one choice, which is Bitcoin, the Bitcoin blockchain, and a way to buy and sell it without going through exchanges and putting things in a number of different types of wallets that can accept other cryptos, but not all cryptos, and on and on and on. So the important thing to us about this crypto system, this crypto ecosystem, is that it started out on the right foot and then began to develop into all of the wrong things. And each one of those things made a lot of people a lot of money, and some investors some money. And then a lot of those investors have given back a lot of that money. But the people that haven't given back any of the money are the ones that developed all of these new pieces, all of these new ICOs, all of these new alts, all these new exchanges, and now all of these things called stable funds. You don't need a bunch of them. You simply need one that works. And the one that works, has to be transparent so that everybody understands what it can and can't do. Now, we have told everyone that we have come in contact with through these various outlets that ask us, when they say, yes, they've got X number of dollars, hard-earned dollars, transferred over onto the Tether system, my first thing I tell them is, even before we have established a relationship as a consulting relationship or as a discretionary relationship, that what I want them to do is take all their money off of that platform. And I don't say that because I know anything. That's the problem. I don't know anything. I don't know if it's valid or if it's not valid, because I've never seen an audit. And it was promised in the white paper that there would be audits, and there haven't been. And a lot of people for years have called for it. And because of that, it is an unknown. And when you're putting hard-earned money into something that is unknown, you are being foolish. When you put money into something that's unregulated, you are being foolish. That's the way I look at the world. I'm very conservative about taking wealth and moving it into something that you can't completely understand if you try to. If you really ask a lot of questions, read as much as you can, and you still come to dead ends, that is something to avoid, because there's so many alternatives where you don't have to do that. Stick with the things you know. So that's why I brought up money market funds. So I want to just give you a side-by-side comparison of stable funds, stable dollar funds in the crypto world, things like True US Dollar and Gemini and Pax and a number of other ones, DAI, and the early years of money market funds, which have been around now for over 40 years and have $3 trillion in them as of today, which is actually a drop from where it was at one time. There are approximately 300 taxable money market funds and another almost 100 non-taxable or tax-exempt money market funds around today, with approximately $8 billion in just one type of, $8 trillion in one type of fund, which is a mutual fund, and approximately, as I said, $3 trillion in money market funds. In the world of stable crypto type dollar funds, the new ones that have come along that in many ways are superior to the original design of Tether because they are regulated, and I'm talking about Gemini, and they do issue monthly audits, and it's easy to follow what they are trying to do. The problem is there's no money in them relative to everything else, including relative to Tether. That might very well change, and we'll talk about that when we take a look at what happened to Tether last night, and have happened on a number of other occasions in the past where you have quote unquote broken the buck, where it should be at $1 and it's not. Now, I actually am a bit critical of even things like TUSD, which is the true US dollar stable fund, because it's not stable. Today it was trading at $1.03. You don't want it to go up, because if it goes up, that means it can also go down. That means that the necessary fundamentals are not there to keep it as a stable dollar fund. Now, people that have money in them and see that it goes up 3% are happy because it went up 3%. But the inverse of that means it's also true that they can go down 15%, which is what Tether did last night, before settling down only 10% and then coming back only down 3%. That movement is what is important. Don't call it a stable dollar fund if it's not stable. And if it is stable, then let everybody know why and how it is stable. Now, people have criticized some of my comments earlier this morning by saying, yeah, but money market funds broke the buck back in 2008. And I made the comment that I remember the day that occurred and what the effect of it was on all the financial markets. But what's important about money market funds is nobody has ever lost a penny in any of them at any time. The dollar has been broken 3 occasions, and in each of the occasions, everybody got their full dollar out times the amount that they had. And that was not because of regulation. It was because the sponsors of those money market funds stood behind them completely and made up for any losses, even on a day basis, when the dollar fell as much as 3 cents in one occasion back in 2008, and then quickly went back up to $1. But anyone that had sold out while it was down was made whole. I can't say that if we don't know what's happening at Tether, and we don't know the relationship between Tether and the banks, and we're not sure who the banks are, and when ties are severed between the platform and a bank, which has recently happened at Tether, it calls into question what's really going on behind the scenes. So it's the not knowing that is important. And the only way for Tether to make sure that everybody is on the same page and has confidence is to be completely transparent. And they've had many, many opportunities to do that. And in my opinion, they have always ducked taking the responsibility necessary and continue to do so as of today, which is why we're seeing other types of stable dollar accounts and funds coming out. But again, I just did a quick look on CoinMarketCap, and it's abysmal. True US dollars has $156 million in it. To a lot of people, that sounds like a lot of money. It's not. When the entire market cap of all cryptos is $200 billion, and there are a number of US corporations that have larger capital than the entire ecosystem of crypto. When you start talking about DAI with $62 million, Gemini, the volume on a daily basis is $500,000. These are nickels and dimes. All of the money is still sitting in the one oldest, which is Tether. And that is what sparked not only the short squeeze in Bitcoin, and we'll get into that in just a moment, but also people running from Tether, trying to get out by buying Bitcoin so they can get out and moving it somewhere else. The problem is there's nowhere else to move it. These PACs and true US dollar might someday be a place that significant dollars flows into, but it's going to take a long time before that happens. In the meantime, what happens to this space? Total confusion. And I think that's important to note. Now, just the one day that a money market fund back in 2008 broke the buck had significant lasting implications for money market funds, just as what we have seen is going to have significant long-lasting, we're talking 5, 10, 20 years out, implications for the crypto ecosystem. But let me just give you a couple of things that I pulled out before this show, because I was interested in when were the peaks in money market funds in terms of the total dollar amounts in and the number of money market funds. And the answer is back in 1999, the total number of money market funds peaked at 700 for taxable and another 300. So let's call it 1,000 money market funds in 1999. Today, there's 400. So the number have diminished. The dollar amounts have also diminished, but not very much. In other words, more and more money has been flowing into money market funds that have proved, because of their size and who their sponsors are, that you will be taken care of. Back in 1999 and 2000, there was $8 trillion in money market funds. And today there are still, 8,000 different funds in money market funds, and they've been dropping ever since. In terms of dollar value, the peak was in 2008, which was the perfect time for them to peak. Why? Because people were getting out of stocks and bonds because of the 06, 07, 08, 09 crash in the US economy and the stock market. So the peak was 3.8 trillion in money market funds in 2008, which was up $1.5 trillion from 2006, when we started getting into problems with bonds. 2007, it accelerated, and $1.5 trillion moved into money market funds during that period of time. But since then, since the bottom of the stock market and the economy in 2009, that money has not stayed in money market funds. It's dropped $1 trillion from 2008 till today. A lot of that money went back into the stock market, which has been going up for 10 years. And a lot of that money, if the stock market turns down, will go back into money market funds because of the safety that has been proven over the last 40 years that nobody has lost any money. It's a little bit like annuities, and we haven't talked about them before. We will do a show on annuities, because when people get frightened of the stock market in the past, a lot of money moved into annuities, which is an insurance product that is got the backing of the insurance company behind it. Nobody has lost a penny in annuities since they became popular in the 1960s and 70s. There's all kinds of other problems and reasons I don't recommend them to people relative to being able to get to your money whenever you want it to do whatever you want. You can't do that in an annuity. So annuities began to increase what you could do with them, including putting that money into the S&P 500 instead of just in insurance products or backed by bonds, with certain guarantees to protect you if the stock market goes down. But to get all of those bells and whistles, you need to tie your money up for long periods of time. The great thing about money market funds is you can get right into them and right out of them instantly. Except for a very short period of time in 2008, where everybody was trying to get money out of everything, including the fund that broke the buck, and they refused to pay, which is their right to do immediately. You could only take a certain amount out over a period of time, so there wasn't a run on the money market funds. But as I said, no one ended up losing a penny. Okay, that's kind of the background where this whole idea of stable dollar came from. It works very well in the securities market, but there can be glitches. Not very many, and we haven't seen any for the past 10 years. Earlier this year, there was some rumor about the possibility of a money market fund breaking the dollar again. So I just want everybody to understand that that's the background behind this discussion on what is going on with these stable dollar funds. Okay, let's go from the general to the specific. What happened with this break down to 85 cents last night, and why it resulted in a short squeeze in Bitcoin. So to do that, I'm going to pull up a chart. Many of you have seen charts on what happened to Tether last night, and also going back in history, how it's occurred on several other occasions, which means it's not really a stable dollar fund. And the question is why? And unfortunately, we don't know the answers, nor does anyone else except people that work there specifically. Is there really money to back up every tether? If there is not, what is the mechanism to put money in the bank, if it's not there because it's part of the Tether platform, then the lines of credit through banks, how does that actually work? And what are the limits on it? If today $1 billion was requested to flow out because a number of large accounts requested it, what is the mechanism by which they will get that money? And what are the limitations on it? And does that mean if those limitations between a transfer in the form of credit from a bank onto the platform is not sufficient, is that what caused the price to drop? Because more money was flowing out than could be put in a timely fashion. And what does that mean in terms of delaying payment? And what are the limits on those delays? Now, we know what is being said, but we have no proof of that. And it will be, I think, incumbent. This is the clarion call for Tether to break the silence and show who the wizard is behind the screen and what power does that wizard actually have and what power doesn't the wizard have. If Tether comes forward in the next several days and opens up the books and shows exactly what's happening, and it's convincing, then maybe all it was a momentary glitch, which has happened on a couple of other occasions before, but Tether has always bounced back down up to that $1 trading level. So to me, this is one of the most important issues facing the entire ecosystem. The sub-issues have to do with your ability to move money from one place to another, from one exchange to another, from one wallet to an exchange, from an exchange to another exchange like BitMEX that only takes Bitcoin and not other things. That's called transportation. It's like in the game of bridge. Transportation is the ability to move from one place to another easily, from one type of a card to another type of a card between people. And the worst transportation I have ever seen in the financial markets is in the crypto ecosystem. Leah and I have been blessed by opening up a number of consulting client accounts in a number of countries around the world. And as you go from country to country and try to interact with the crypto ecosystem, you begin to realize how difficult it is to move your money around, to get your money in a form that can get back to you without all kinds of roadblocks in terms of how long it's going to take, how much you can take out, in what form it can be taken out, or if it can't be taken out, in dollars or in pounds or in Deutschmarks. What form does it need to be in terms of other cryptos that can be moved to another exchange that will accept that? It's just plain silly. And that's why I, to this day, have not bought any crypto on any exchange, including Bitcoin. That's why I use GBTC, as flawed as it is, waiting for some real security to come along that can be traded with a high degree of confidence, the way that money market funds have a high degree of confidence, even though at times they can have their own problems. All right. So what I'm going to do is I'm going to go to screen share, and we're going to just take a look at what actually happened here last night and its effect on the one saving grace of the crypto market, which is Bitcoin.
Ty, it's big.
Yeah. What's that?
I think you need to full screen it.
Okay, good. I'm going to do it this way then.
It's because you didn't say boombada.
Yeah, boombada.
Everyone's talking about CZ.
Okay, let's do this one.
There we go.
Okay.
Looks good.
Now, we're going to talk at the end of this about what the implications of this weekly candle is, because this was so extreme and came out of supposedly nowhere. It didn't come out of nowhere. We know where this volume came from. It was the purchasing of Bitcoin to get away from the Tether platform. Now, nobody has proven that yet, but it will be proved that not only were people running from Tether and the Tether platform, but they needed it to be in a form that they could get into quickly and easily and then move it somewhere else. I don't see a lot of evidence that that moved into stable, other stable dollar. It's like Gemini or True USD or PAX. Some of it did, but not to the extent that this volume indicates. Okay, so going into last night, we had a low of 61.43. We went sideways, and then it all took place in 2 hours, running from the $6,200 level up, depending on what exchange you're looking at. I'm looking at Bitstamp, 67.56 in a very, very short period of time. Now, you know it's a short squeeze because of what happened 30 minutes later, where you gave up half of those gains and have not been able to recover any of them since. We're still at the halfway mark, and that had the potential to do a lot of damage to technical charts. It turns out that it didn't, except on a very short-term basis. And what I mean by that is that even though that was such a momentous event, dropping to 85 cents on Tether, with the tremendous demand for Bitcoin as a means of transportation of money between platforms and between exchanges and into other things, it actually did little or no damage to the overall picture of Bitcoin itself. We had big gains in many other cryptos last night. which means to me that not only was that new speculation into those cryptos, but it was also simply a transfer of money out of Tether into something else that people believed had more potential without the risk of the bottom dropping out, with some kind of statement, either by regulators or by the platform itself, or someone on the inside explaining exactly what was happening. It was simply getting out of one thing and trying to get transportation to something else. Now, you know my feeling of what I have just described about the overall ecosystem being the reason that this market peaked when it did and has been falling ever since. It's not a technical thing. It is ending up in a technical pattern that I call a hyperwave, but it's a fundamental thing having to do with the inability to move amongst and between the various assets within the crypto system. And we've seen that by hacks. We've seen that by problems on exchanges. We've seen that by double counting and double billing. We've over and over again. And you've heard Leah and I talk about that, including her brilliant article on Medium, summing it all up. That to me is the overriding question here. And what we saw last night, this is simply a blip, and that's what I called it this morning. And it's not one that has changed the direction of Bitcoin in any way. So what I'd like to do now is go through my analysis, because it's been about a week since we've done this. And we will start like we always do. This, yes, is the phase 2 line, and we'll get to that at the end here, because what I've been saying about it still holds true in my mind. So let's start with the stop and reverse points. Did no damage to the negative tone of the stop and reverse points. We would have had to get up to 8,128. Same thing this entire week for that to be taken out, at which point I will change my views of what this bottom is looking like. I do not believe that's going to happen. I think it's approaching impossibility. There is no certainty in any of this. There's not total certainty to the downside, nor total uncertainty to the upside. What we're doing is we're simply going by the probabilities of what all this is telling us. Let's take a look at the Bollinger Bands. We penetrated the middle Bollinger Band last night because of this short squeeze, and immediately it was rejected. And now we're well below that midpoint once again as we sit here tonight. We're at 64.14, and the middle of that band is about $280 higher than we are now trading. Let's take a look at the moving averages, what we call consensio. The exact same thing is happening. We, for a very short period of time last night, we were able to penetrate the intermediate term, which is moving down. We did not turn that up. And now the price action, all the price action between the open for the week and where we are right now is below the declining intermediate term. And that's very important to me. For those of you that listen to my consensio webinar that Leah and I did last Friday. Okay, let's put that back on for a second. Let's remove the candlesticks to see how, in my terms, definitive this still sits after what happened last night. We've got a declining long term. We've got a declining intermediate term with a couple of short breaks in it when the prices moved up here and here and here and here, but always we return to the downtrend. And the short term, after breaking above it, couldn't break above it, couldn't break above it, is headed down. We've got all three headed down. That's the definition of a bear market, even though we had that short squeeze. We'll put the price back on and move out of these. And we will put the RSI up. The RSI has ticked up because of this candle and now is getting further and further away from where it needs to be, which is 30. We got down to 43. We are now up at 45. We have come down from 50, from 51, from 53, and from 55 since February. Still negative, still has a long way to go on the downside. The MACDs have been flat but slightly positive for the last 5 weeks, but there's been almost no movement in terms of the two moving averages, which is exactly what you would think in a downtrend. So what I am saying is that a lot of people got excited that, yes, Tether is a problem, but it has launched a new bull market for Bitcoin. Because as more and more people leave Tether and don't have confidence in the new stable dollar funds, and the only way to measure that is by money flowing into it. And I gave you, the biggest one is true US dollar. It's number 47 in terms of all of the coinage on the market cap. And that means there's 46 above it. Number 95 is DAI, that's only got $62 million in it. So there's no room there. Let's take a look a week later and a month later and see if money's actually flowing into them, or if money is going to be flowing out of Bitcoin into something else. And I don't have the answer for that. Nobody does. All I know is what these charts are telling me, that when I woke up in the middle of the night and I saw what was going on, I immediately started looking to see if it was going to change anything in these patterns. And it's very clear to me, for what that's worth, that it has not changed anything in terms of my analysis based on Hyperwave. Now, I wanted to talk about where this phase line is. I've been saying that it's going up at $80 per week. And now, because of these last 2 weeks, it has gotten up to over 5,600. And the difference between, I'm going to make this even bigger. So we can get a much better look at it. Let's get rid of this. So I can make this a little bit bigger. Okay, that's not going to work. All right. The line at this point, which was last week ending last night, was at 55.65. And this week, it's at 56.44, which means that next week, it's going to be over 5,700. And the low of Bitcoin has been 57.74 back on June the 24th. In other words, within a week or 10 days, the price of phase 2 line will be equal to the low that we hit back in June, which gives us very little room for any downside action without breaking through the phase 2 line. And what that means to me is if it closes below that line, there is no more support down to 1,000. And I know how ludicrous that sounds, but to me, that is the fact, that we will bounce at approximately 5,000, even though that's $700 below the phase line. We will probably bounce at 49.75, which is Tone's line, and probably at 4,800, somewhere in that range on the next breakdown. But I'm getting more and more pessimistic about that because we are just so close to the phase 2 line that if we drop $1,000 from today down to 5,400, we will be well below the line, but all it will take is a $300 rebound before the end of the week from 5,400 to get back above the phase line. I just don't expect that's the way it's going to play out. My expectation is that when we break 6,000, or let's call it the band between 5,800 and 6,200, which we were trying to do before this short squeeze. Going back, we'll take a look at a 4-hour chart. We were, before the short squeeze started, we had dropped down to 61.43. So we were well within that 5,800 to 6,200 range. And if it wasn't for that short squeeze, I'm convinced, as Tone Vase was, as you know, he put on a short position off of that analysis, and that was the correct position to take. It still is, even though we had all of this activity above the lines. And that's why I've taken so much time tonight to go through why this activity has done nothing to this picture. This picture being the bear market of Bitcoin as it gets closer and closer once again to this bottom area. So what we have just gone through is very significant, has had a tremendous reaction in terms of price, That has been cut in half already, and we will just have to wait and see exactly how this plays out. My interpretation is that 70 to 80% probability that in the next week we will take out this phase 2 line and we will break the $6,000 level. And that is not because of Tether. It is not because of the short squeeze. It's not because new money is flowing in from China, which is what a lot of people were speculating on that volume surge. It is because of the realization that the crypto ecosystem is not ready for prime time. And what I mean by that is any fiduciary financial company would be foolish to get into this kind of an ecosystem until it can clean itself up. And there are a number of ways that can happen, but it's going to take a long time. And I believe we must first break down and eliminate a lot of the problems. And with that, we've gone well over what I wanted to do, but hopefully there's going to be some questions. So what I would like to do is get out of this and get out of this.
Hey, Ty.
Hi, and come back to that.
So we actually don't have any questions, but that was quite a pessimistic, although we believe it, note. It's a long-term optimistic note. So I'll ask one last question, which is still in alignment with stable coins, etc. What do you think about the possibility of the Fed coin actually going through? And if it did, what would that look like? Would you have any faith in it?
Yeah, I would. I'm not sure what it's going to look like and how it's going to work, but every layer you put on that gets closer and closer to regulation of the main parts of this crypto system, meaning exchanges, meaning the actual ICOs and the alts, either getting rid of them or getting them regulated, just the way money market funds are regulated. And mutual funds and ETFs. Nobody has ever lost a penny in a mutual fund because it had a problem. They've lost money in mutual funds because of their investments. That's a different story, but not because the ecosystem couldn't support it. So Gemini is the closest thing we've got, in my opinion, because of who's behind it and because they're willing to say, okay, regulate us. Now, pure maximalists don't like all of this stuff because every time we move away from just Bitcoin and have to put all these other things on, that waters down what we could be doing with Bitcoin. I would much prefer us dropping to 1,000, not worrying about regulation because Bitcoin can't be, shouldn't be, won't ever be regulated. That's not what we're talking about. What we're talking about is all of this other stuff that has been added either maliciously or ignorantly or with best intentions that have gone horribly wrong and remain that way today. So if helping the transportation between these incompetent foci, meaning the various exchanges and their relationships to banks, meaning the relationships between where your money sits now and how you want to interact with the ecosystem. if there is a stopgap measure in the form of a stable dollar that can be used across all of those with impunity, because that stable dollar is regulated like Gemini is, then that is a step in the right direction. But it also means what it's doing is it's slowing the progress of what Bitcoin can eventually become. And I would rather have it over quickly, like tearing off a Band-Aid, than picking at the scab over and over and over again for the last 3, 4, 5 years that results in all of this confusion. But if that's what the world wants, if that's what the crypto community wants to keep working on, so be it. But that is not going to be translated into higher prices. That's going to be translated by my work into lower and lower prices until all of those gimmicks are forced out of existence. And then we're ready. And boy, am I ready.
All right, I like that ending. Tyler, maybe tomorrow we'll speak about, have you on the Fidelity news. Have you had a chance to check out what's going on with Fidelity?
I have not. I've heard about it. What people don't realize about Fidelity is Fidelity started mining Bitcoin 4 years ago in a big, big way. And so if anybody is going to step up to the plate, that I tell everybody that's where you want to have your money. The world's largest privately held corporation that does everything that I have seen in the last 30 years correctly. So I'm very excited to get into the details of it.
All right, maybe I can't even speak. Next one, and we are just almost at an hour, so let's call it Ty. And yeah, any last words?
No, thank you all very much, and we'll be announcing our next webinar shortly. Thank you very much.
Yay! Bye, everybody. Thank you. Bye, Ty.
Bye-bye.